Pantheon AI presents Markets Dip. xAI strikes $300 million deal, GameStop buys Bitcoin, and sell in May Reconsidered. Good morning, everyone. Welcome to the PAI Morning Briefing. It's May 28th, 2025, and I'm your host from Pantheon AI. Hope you've had your coffee, because we're about to dive deep into the markets and all the news shaping our financial landscape today.
You know, I always look forward to this. It's like our daily shot of market insight, but with a bit more personality, right?
Exactly. A little wit to get us going. So let's kick things off with our quick market overview. This morning, the S&P 500 is trading at about 5,913.1, and it's just down a smidge, negative 0.21%.
Just a smidge, huh? Sounds like a cautious start. What about the Dow and Nasdaq?
Yeah, definitely. Over at the Dow Jones, we're seeing roughly 42,257.29, with a decrease of nearly 0.25%. Meanwhile, the Nasdaq is sitting modestly at around 19,186.21, declining by about 0.24%.
So, across the board, pretty minor dips then. What's happening with the smaller caps, like the Russell?
The Russell 2000 is at about 2,073.58, showing a slightly larger dip, nearly 0.78%. And in crypto, Bitcoin's around 107,250.96, down almost 1.58%, while Ethereum's lingering at roughly 2,637.08, off by 0.94%.
Wow, Bitcoin's taking a bit more of a hit there. So it really does seem like the markets are in a cautious mood today, doesn't it? Like you always say, these small moves can be as unpredictable as your neighbor's cat in the morning.
Exactly. Always keeping us on our toes. But you know, these small moves often signal something deeper. There's an underlying theme of caution this morning, driven in part by the earnings calendar and some significant corporate moves that have been making headlines.
Right, because even minor shifts in major indexes can signal adjustments in market mood. It's a blend of investor sentiment, earnings expectations, and those headline-grabbing corporate events, right?
Precisely. And speaking of headlines, one of the most intriguing today comes from Elon Musk's camp. His startup, xAI, just announced a partnership with Telegram for a $300 million deal for their Grok chatbot rollout.
Whoa, that's a major move. Blurring the lines between AI and everyday communication tools. I mean, think about how that could alter integrated tech solutions. $300 million for a chatbot rollout? That's significant.
It really is. It underscores the growing strategic importance of AI-driven enhancements in the communication sector. It's like watching a high-stakes chess game.
Totally. And speaking of bold moves, GameStop just made its very first Bitcoin purchase, 4,710 Bitcoin, marking their initial foray into crypto investments.
Yeah, but it hasn't come without challenges, has it? Their stock's pulling back in response. It's a classic example of a company trying to balance its retail roots with the lure of modern digital assets.
Trying to teach an old dog new tricks, right? It's fascinating, though. Could this set a precedent for other retail giants, or is it just an isolated experiment?
That's the million-dollar question. Now, you might be wondering how all these corporate moves tie into the overall market sentiment. Well, stock prices are slipping a bit as investors await earnings reports from big names like Nvidia and Salesforce.
Earnings season jitters. I get that. It's like waiting for a new menu at your favorite restaurant. Exciting, but a little nerve-wracking because you don't know if your go-to order will still be there.
That's a great analogy. And speaking of corporate developments, Honeywell is reinforcing its relationship with activist Elliott, with Mark Steinberg joining its board. This has actually boosted market confidence in their stock.
Interesting. So big shifts in boardroom dynamics can signal a reorganization or strategic pivot. Investors will definitely be watching Honeywell closely after this.
Absolutely. It's where finance and psychology meet. Now, in tech, despite a 70% surge in a year, Broadcom is still being touted as a must-own AI play by Melius Research.
70%? Wow. But it makes sense. Their AI chip sales and VMware acquisition profits are really bolstering their status. Strong performance doesn't always lead to complacency, does it?
Not at all. It's like celebrating a win, but knowing the best hand's yet to be dealt. Then there's the old market adage, sell in May and go away. Many who followed it might be missing out on what some experts are calling the best May for the S&P 500 in decades.
Right. First Trust pointed out that conventional wisdom might have lost its luster. Market strategies need to evolve, just like technology. It's not a flip phone world anymore, is it?
Definitely not. On the geopolitical front, there's news from Iran. They might agree to temporarily pause nuclear enrichment if the U.S. recognizes their right to enrich for civilian purposes and releases frozen funds.
That's huge. Any positive move there could ease tensions and subtly impact the global energy market, especially crude oil prices. It really shows how interconnected global policy and market performance are.
It really does. Switching gears to precious metals, silver is in the spotlight. Despite gold's record run, indicators suggest silver is undervalued. The gold-silver ratio is near historical highs, even with silver facing a global deficit for the fifth year.
So some analysts are suggesting it could be a buying opportunity? The precious metals market always has its own rhythms, doesn't it? Intrigues investors looking for value plays.
Precisely. And another intriguing discussion making the rounds is about, quote, baby bonds. What might traditionally be seen as a tax bill giveaway could actually solve the retirement crisis.
Baby bonds? That's a profound idea. Give a baby some money, and they'll want more as they grow. So a stable, long-term funding source to ease retirement challenges down the road. That's a creative policy proposal.
It really makes you rethink savings and intergenerational wealth transfer. And finally, in corporate news, WorkBoard acquired Quantive, combining two heavyweights in strategy execution.
A strategic consolidation aimed at accelerating innovation, unmatched AI capabilities, world-class customer experience. It's definitely a sign of how companies are leveraging AI and big data for operational excellence.
Exactly. So now that we've covered these 10 important stories, let's take a few moments to analyze what these developments mean for various sectors.
Good idea. In tech, we're clearly seeing a convergence of traditional tech, AI, and digital comms. That xAI and Telegram partnership, just the tip of the iceberg, really.
Totally. It points to a broader trend where startups and giants are racing to harness AI, not just to improve products, but to redefine entire communication ecosystems. And Broadcom's dominance confirms that semiconductors are the backbone of this digital revolution.
Absolutely. Moving to energy and geopolitics. That potential easing of tensions with Iran could set off a ripple effect across crude oil markets. Any diplomatic breakthrough would likely be met with cautious optimism.
It's a reminder that global geopolitical events often have a more muted, but impactful influence on local markets than you might initially assume. And in finance, the evolving strategy around traditional approaches like sell in May and the potential of baby bonds could signal a shift in how both institutional and retail investors approach portfolio management.
Yeah, investor behavior suggests long-held adages might need revisiting. Sticking to decades-old rules in this new market dynamic, that's risky?
Very. Meanwhile, in industrial and corporate governance, Honeywell's deepening ties with Elliott shouts a clear message. Restructuring and strategic change are on the horizon. New perspectives at the board level could boost shareholder value.
And WorkBoard's acquisition of Quantive just reinforces that consolidation in corporate strategy platforms is becoming a common strategy. Companies want to leverage AI and big data for operational excellence.
So, what does all of this mean for global markets? In an ever more interconnected world, events on one side of the globe can instantly ripple through. While we might see only a slight dip in our U.S. indexes, combined with strategic moves like Iran's potential policy shifts, it can significantly influence market risk perceptions globally.
It's like assembling a jigsaw puzzle, where every piece, no matter how small, contributes to the overall picture. And experts agree, with earnings season and high-profile corporate moves, we'll likely see volatility in the coming weeks.
Despite today's slight downturn, the breadth of corporate stories, from groundbreaking tech partnerships to innovative fiscal policy ideas like baby bonds, suggests investor optimism is just beneath the surface. It's a great time to ask yourself, are you positioning your portfolio for stability or growth?
Exactly. Are there sectors you believe will outperform, or are you waiting on the sidelines? These are the kind of thought-provoking questions that can lead to new strategies.
Now let's have a bit of a heart-to-heart about what this means for you. While market fluctuations can seem daunting, remember these are often moments when opportunities arise. It's like standing on a diving board. A little nervous energy can push you to leap into potential gains if you've done your homework.
That's so true. The tech sector continues to offer promise, but with high potential comes high risk, and sometimes markets just decide to take a break, If the stock market were a person, today it might be saying, I guess even I have my off days.
Haha, I love that. Looking at the broader picture, global markets are sending mixed signals. We're seeing a rebalancing in investment strategies, with traditional approaches being tested against new models, and geopolitical events inject uncertainty.
So it calls for both caution and a keen eye for emerging opportunities. That slight dip in indexes? It could just be the market calibrating itself for the next big move, driven by AI, energy, or corporate restructuring.
I often remind myself that in times like these, having a clear, informed strategy is what separates successful investors. With earnings reports from Nvidia and Salesforce around the corner, every piece of market data is like a signpost.
So the question is, am I prepared to adjust my sails if the winds of change shift? Whether you're in tech, energy, or finance, the answer likely lies in staying informed and being agile.
Well said. Before we wrap up, let's review some key takeaways. Market indexes are in a slight dip, reflecting caution ahead of earnings and significant corporate announcements. In tech, Elon Musk's xAI partnership and Broadcom's AI chip leadership show innovation moving at breakneck speed.
And in finance and corporate strategy, debates over traditional investment strategies and novel proposals like baby bonds are forcing us to re-examine long-standing market conventions. Plus, energy and geopolitical narratives remind us no market exists in isolation.
Exactly. As you reflect on these trends, think about where you see opportunities in your own portfolio. Are you considering tech stocks, or maybe intrigued by undervalued precious metals like silver?
And what about those emerging policy ideas that could redefine retirement planning? These aren't just headlines, they're signals to guide your investment strategy.
Before I sign off, a few thought-provoking questions. How might AI integration in everyday comms transform our consumer habits? What does GameStop's bold crypto move mean for retail investments? And with sell in May evolving, are you rethinking your own financial adages?
Great questions to mull over. It's been a pleasure having this deep and engaging conversation with you this morning. Remember, Pantheon AI is here to serve as your information co-pilot.
Always ready to help parse through the complex tapestry of market data, corporate developments, and global trends. Make it a habit to come back tomorrow for another episode, where we'll continue to decode the financial world with clarity, insight, and a dash of humor.
And as we part ways for today, keep this in mind. Investing is as much about staying informed as it is about embracing change. Learning shouldn't feel like a full-time job.
Until next time, stay curious, stay engaged, and keep questioning the status quo. Have a great day and happy investing.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.